Hi, this is Ron Rowland from Money and Markets TV. Facebook's initial public offering this month created plenty of excitement, but unfortunately for early buyers, it was the wrong kind of excitement. Now, after a steady slide in Facebook shares, the company is being sued by investors unhappy at aggressive pricing and system glitches. But for ETF investors, the biggest question may be whether your fund owns Facebook shares. Well, the vast majority of ETFs are tied to indexes whose holdings are determined by another provider. The index provider, in turn, must follow predefined rules when adding or removing stocks from the index. They must also announce those changes to the index in advance. An ETF manager may have a little wiggle room in matching its actual portfolio to the index, but they can't stray too far. This means that ETFs are typically prevented from holding new companies like Facebook until the company is added to the underlying index. How long this takes depends on the rules of each particular index. In most cases, the provider reviews its holdings quarterly or annually, and any new stocks that meet the criteria are added at that point. ETFs tracking the index generally adjust their own portfolios at the same time. Index providers will begin adding Facebook as they perform their regular reviews. Given its substantial size, I expect we'll see the stock included in nearly every broad market, large cap blend, large cap growth, and technology index within months. By my count, more than 115 ETFs and ETNs will eventually include Facebook. However, a few index and ETF providers can move even faster. For example, the Global X Social Media Fund added Facebook to its holdings with an 8.8% weighting just a week after the IPO. And some other specialized products won't be far behind. The eTrax Next Generation Internet ETN and eTrax 2X Next Generation ETN both follow an index that will likely include Facebook within weeks. But these are small potatoes compared to the PowerShares QQQ ETF. It's based on the NASDAQ 100 index, which is speeding up its normal schedule to add Facebook by August. It will likely have a relatively small weighting at first, but it will definitely be there. However, the real question is, do you want Facebook in your ETF? The answer depends on how the shares perform from here on out. But regardless, I wouldn't worry too much about it either way. That's because the whole point of an ETF is to diversify among companies in a given market segment. As long as the weightings are reasonable, you probably shouldn't dwell on whether any single stock is included. If Facebook shares keep falling over the next few months, ETF investors may be glad they missed the IPO because the delays could allow them to get in at a better price. We'll just have to wait and see. I'm Ron Rowland for Money and Markets TV. Thank you for watching.